Hey, welcome to Cryptocurrency Basics. I know what you must be thinking. I've heard a lot about this cryptocurrency, this Bitcoin. I know you've probably seen all the different SNL skits and all the different cartoons and whatnot. The price has certainly taken a bit of a volatile turn, so it's not really as around as much as it used to be. And by used to be, I mean 4 months ago. But if you take a look at the history of Bitcoin ever since 2008, it's had five different occasions where the value has dropped 80%. Um, Bitcoin came out at 0.0003 pennies, so 3 thousandths of a penny. That was the initial value. As of December of last year, it reached almost 20,000. So it is our belief, if history is any indicator of going forward, and as long as the fundamentals make sense and the story is intact, which we believe it to be, that this is the time where we want to be involved before the panic buying. I know most people only hear about panic selling, but there is such a thing called panic buying, where people look around and say, you know what, they have the fear of missing out and they just want to get in. So we're going to teach you really everything you need to know, get you completely from beginner to professional, depending on how seriously and how much of this you want to learn. But what I will promise you is this. If you go through every slide, take the proper notes, you will have the ability to manage your own trade in such a way that the probability, I'll never say 100%, but will be 99% in your favor. I will go ahead and arm you with the technical indicators you need to watch, the fundamental indicators you need to know, whose voice can move a market, whose voice needs to be heard that second, how to hear it that second as if you were sitting next to him at a bar. What indicator means that the future is bright? What is predictive? What is able to forecast? And what are the levels you need to watch? And most importantly, when things are not going your way, how to recognize that and how to get out of that. So stick with me, and I promise you, by the end of this, you'll be as professional as it gets. In fact, I'll even show you how to leverage your own money 100 times to one. All right, let's get started. What is a cryptocurrency? Now, I'm going to always use Bitcoin as an example because it's a household name, but cryptocurrency refers to digital coins, digital assets, things that are backed by the network that they operate within. Sometimes they're actually backed by real assets. You know, there are new cryptocurrencies out there that are backed by real estate and things of that nature. It's kind of like a quasi way of getting into the stock market. If you think about new public offerings, IPOs, they're backed by the company itself. People have been getting really fancy with cryptocurrencies and blockchain technology, and the SEC has come down against that. So there is less opportunity to do that, but that doesn't negate what the power of cryptocurrency actually is. So really, when you get into it, what problem does cryptocurrency solve? I mean, why do we even care about it? For as far back as one can remember, you could think of the US dollar and really ancient Rome, just currencies in general, always were backed by something. Usually it was gold. In fact, in this country, it was backed by gold as per the Bretton Woods Agreement in 1944 after World War II, where the US had most of the world's gold and all of the world's might and said, hey guys, listen, we got everything. You back your currency by us, we back our currency by gold. Everyone moves in a happy fashion, whatever. 1970 rolled around and US was just printing and printing and printing and France called up and said, "Hey guys, listen, we don't actually think you have the gold, but we want to redeem these dollars because that's what you said." And the US said, "Yeah, sorry about that, guys. You're now backed by the full faith and credit of the US government, which is a tax revenue based system." If you ever take a look at the debt, you'll see how unsustainable it's been since then. The problem that Bitcoin and cryptocurrencies in general are trying to solve is the blockchain technology allows for a finite supply of currency used within a particular network against a ledger where everyone takes simultaneous notes automatically, completely anonymously without needing an intermediary. What does that all mean? It means basically you can have faith in your money again. That when you own a Bitcoin, you know that it cannot be inflated into more Bitcoins. Same thing with all different cryptocurrencies. In fact, We're going to get to a point where your son or daughter are going to have Mary tokens or Ben coins by the time they're 6 or 7 years old, because these programs are complicated to invent but not complicated to duplicate. They're automated systems. You could create blockchain in your sleep. In fact, I could create it whenever I feel like it. It's just a matter of how many people are interested in your particular coin. So that's why you got to be comfortable and careful with cryptocurrencies, because there's a lot of room for fraud. But what it solves is having faith in one's money supply, a store of wealth. To know that, like for instance, when the 2008 crisis happened and the world was in a tizzy, and the government, instead of allowing these companies to fail, decided to bail them all out. Well, how did they do that? They newly minted like $2 or $3 trillion, and they allowed that to be lent to these companies. So who really bailed them out? Well, a lot of people say the taxpayer, because it was taxpayer money. And then the banks and companies say, hey, listen, we paid that taxes back. We paid everything back to you. Therefore, you didn't give us anything. You just lent it to us, thanks. And you even made a profit on us. Great. But that currency is still in circulation, which means every dollar that I own is now subsequently worth less because 3 trillion new dollars have been in existence. So where's the purchasing power of my dollar? And that's what they're trying to guard against, because it's all cute when you have the strongest military in the world and you're the greatest nation in the world, and you have a president that is not afraid to tell everyone, hey, listen, go kick rocks if you don't like what we're doing. But at some points, the economics do take over, and that's been the fear level for everyone that's getting into this market. They're saying, listen, the US dollar, as great as it is, it's not going to be great forever. We don't know when, but it's not going to be great forever. At some point, the debt, which we have 21.5 trillion, is going to overtake the country. The GDP of this nation is 19.5 trillion, which means we owe 2 trillion more than the nation's worth liquidated today. At what point does that become too much? And the belief is at that point, money will flow to a system that it could believe in, that it could trust, that is ironclad, not up to the discretion of anyone. There's no centralized authority. It cannot be tracked. It cannot be seized. It cannot be frozen. It is truly the power of the people to have control of their own money. So that is cryptocurrency. The history, there's an anonymous programmer by the name of Satoshi Nakamoto back in 2008, put a creation for Bitcoin on a popular cryptography blog. And it got taken and it got created. He has 1 million Bitcoin in his own account. We know that because we could see everyone's accounts. We just don't know who they belong to, and we'll show you that later. But he's a real person. And the history is of such that it has an anonymous creator that can't do anything about it. The code is locked. There's nothing that anyone could do about it. Bitcoin is really, and cryptocurrencies for that matter, blockchain technology. If you could just think of it like this, it'll be so much easier. It's just one big digital ledger where everyone takes the exact same notes at the exact same time. So ask yourself, does that have a real future? If you ask yourself this, in 100 years from now, do you think money will be paper or digital? The answer seems fairly obvious. If you ask yourself, can debt go up forever and production not go up at the same rate? Can taxes go up forever? What point do these things turn? And all those answers will answer your question, does Bitcoin or cryptocurrency have a real future? Because there's integrity in the money, and we believe it does. Let's keep it moving. So what's it backed by? Precious metals? No. Gold? No. Silver? No. Platinum? No. Profits? No. There's no shareholders. There's no government. I feel uncomfortable saying nothing because one could say that about the US dollar. What is it really backed by? Well, it's kind of backed by the military of this country. It's kind of backed by the tax collection. You can't pay taxes in any other currency other than dollar. So to pay your taxes, you have to convert to dollars. Therefore, it'll always have a value. So when people complain, oh my God, my taxes are going up, the dollar's going to crash, it's kind of doesn't work that way because you need to buy the dollar to pay your taxes. But if you look at the dollar, it gives you the answer. It's the full faith and credit in the US government. And if you could think of, let's say, a fax machine. Actually, this is a great example. Think of a fax machine. That's Bitcoin. That's cryptocurrency. By itself, it's worth nothing because if you have a fax machine and no one else has a fax machine, who are you faxing to? Exactly. No one. It's worth nothing. But if everyone has a fax machine, well, now all of a sudden, the fax machine becomes very valuable because it's valued based on the participants in that network. If that network decides to just keep faxing, obviously, uh, I would suggest that the postal service took a hit during that time period because things that could have been mailed are now faxed. It's it's a zero sum game. It goes somewhere, and that's what we're looking at with Bitcoin and cryptocurrency. As long as the network of participants is active, believes in it, trusts in it, invests in it, and continues to grow it, well, the value is pretty infinite because the larger the base is, the more value everything becomes. Because if you remember, everything is finite. There is no way to create more Bitcoin. In fact, every 4 years, the supply that can be newly minted, for lack of a better term, just to get it across, but it's called mining, is halved. So it just by the year 2140, all the Bitcoin will have been mined. It's gone forever. So you have to go to someone that actually has it. Now, will I be here in 2140? No. Will you? Maybe. I have no idea. Maybe you're 3 years old and you're listening to this and you're just really, really super smart. But that's not the way investing works. Investing works based on recognizable growth, generational wealth. So if I know that to be true in 2140, well, I don't need to be alive to invest alongside it. I know that my son or his son will look up and say, you know what, granddaddy was a pretty smart guy. Look what he did. So people will position themselves for that. So I don't want the volatility to scare you in terms of Bitcoin. I find that investing is the only place where sales scare people. Because I know if I went to a Lamborghini dealership and they said, hey guys, listen, this Lamborghini was 200,000 last month, or actually 4 months ago. Now it's 60,000. I'm not going to run away and say, no, call me when it gets back up to 200,000. I'm getting in at that second. And that's what we need to get. That's what we need to find important. But we first need to know, do we believe in the prospects? Again, investing. Do we believe in the long term? Because if you could get the long term correct, everything else is fine. How do I use cryptocurrency? Use it any way you want. Use it the way you use dollars. You could purchase things. Many stores take it. In fact, if you walk past a Subway, there's a sign outside that says, we take Bitcoin. There's a company called Overstock.com that takes Bitcoin. In fact, if you take a look at a stock chart of it, they did an initial coin offering of $500 million last year. The stock went from, I believe, 18 at the beginning of the year up to like 80. It's now back down to 30 because it's been moving with Bitcoin. And it's things like that that one needs to take notice of because you cannot buy Bitcoin in the stock market. They just started putting futures, but there's no comfortable way. There's no ticker symbol for Bitcoin. People will buy something that's similar to Bitcoin. That reminds them of it. That everyone could agree. Listen, let's just pretend this is Bitcoin because it's the closest thing. So when you take a look at a company that's worth billions of dollars, quadruple in value over the course of a couple of months, well, that's your tell. There's a lot of money looking to get into this market. The market will mature. People will be able to get into it. There will be ticker symbols for Bitcoin. Well, what is that going to do to the price? When mom and dad could get in, mom and pop, mutual funds, retirement funds, pension funds, when they could start getting into this, well, how much money do they have? Well, I'll tell you, they have the largest investable assets in the entire world of trillions and trillions of dollars. Bitcoin, when it was 20,000, I think was worth 250 billion, maybe. The mutual fund, pension funds, and funds of that nature are worth 90 trillion. Gold is worth 9 trillion. Currencies in general are worth 92 trillion. This market has so much room to go. So anyway, getting back, purchases you could do in stores, you could do in e-commerce. Obviously, online it's a digital currency, so it's It's great for that. And direct. Call up Johnny. Tell him you want to buy his Derek Jeter rookie card, and you're going to send it to him in Bitcoin. He'll send you his key, his 34-digit encryption. You put it into your phone, your smart app, whatever you're sending it from, your trading platform, and boom, done. Investment. Again, you could lend it. In fact, there's many companies that do Bitcoin lending for bonds and things of that nature. They'll offer you an interest rate to lend their coin out. Because, again, to trade Bitcoin, you need Bitcoin. There's no way to inflate it. There's no way to create new Bitcoin. All transactions have to get settled in Bitcoin. So any type of investment funds or hedge funds or anyone that wants to trade Bitcoin needs Bitcoin. And because it moves so volatilely, like I said, 5 different times it's gone down 90%, and it keeps coming right back and going higher, for someone to say, hey, listen, let me borrow your Bitcoin for 6 months, I'll give you 10%, well, that's a great return. Well, that guy's probably making 3, 4, 5% a day on it because it's that volatile. So, and we're going to teach you how to do that. It's not difficult. It does not take a rocket scientist. I promise you, it just takes some discipline. You could also store it, long-term investment. Hey, listen, I think Bitcoin's going to go to 5 million in the next 10 years. It's now 6,000. So I don't need to do anything with it. I don't need to outsmart myself. Let me just store it in my trading platform, my exchange, my wallet, and leave it alone. Or earning interest. There are companies out there that will borrow your Bitcoin and promise you a percent or two return per day on that 140-day contract per se. There's a lot of companies out there. Some of them are fraudulent. Again, buyer beware. And transferring, it's super easy. You could be in Thailand. I could owe you money. Hey, listen, send me the money you owe me. Bing, bing, bing. Check your phone. You got it. And then you could just convert it to your local currency from there. But what's actually really more important, and this is something that I've thought about, Bitcoin and blockchain technology could allow a person to become their own bank. Because as long as you have a smartphone, you're an international banker. You could send money anywhere. You could buy anything you want. You could send it anywhere you want. There is nothing a bank could do that you can't do. And that's the power of this technology. I right now could go to the most desolate area in the most desolate country, let's say, I don't know, Africa, like a country that doesn't have electricity yet. And I don't know if that's true or not, but just go with the picture with me. And I could walk up to a community, a village that's well crafted and well skilled in different labor activities, or create certain products to just get by that the rest of the world might look at as collectibles or antiques or tourist attractions or whatever the case may be. Or can I teach this village to buy and sell on Amazon? I mean, the phone could literally turn a desolate village that doesn't even know who Seinfeld is into the next Las Vegas. And that's the power of blockchain technology and cryptocurrency in a smartphone. That's all you need. You're an international banker. Once you understand that, you understand the future of what we're talking about. So let's see, how do you store cryptocurrency? Well, you get a digital wallet. That's really the most easiest way. You can put it on your trading platform. You could do it in your exchange. But if you want to take it with you, and those use wallets as well, there's a couple things you want to take into account. Your cost, what's the security features, the mobility, how convenient, and how user-friendly. If you are comfortable with all those, then get involved. Use that wallet. And last but not least, how is the price determined? Is there someone that determines it? Is there a government entity? Is there a single person? Is there shareholders? It's a market. Welcome to the big stage. Welcome to Wall Street. Welcome to the world of finance. Anything is only worth what the person next to you is willing to buy it for. That's it. So when the sentiment of Bitcoin, because it's gone down so much, because everybody got in because their cab driver and their grocery clerk said, listen, I need to get involved. I'm going to become a millionaire and I'm going to retire from this $7 an hour job. Or when people are taking mortgages out of their homes to go buy Bitcoin because they better get involved. um, the value goes up. Well, guess what? When it stops going up, well, those aren't really strong shareholders. Those aren't really strong believers. You know what they do? They sell. You want to know what it looks like? Go into a movie theater and yell fire. That's what happens. So the price is determined by the market. And what happens with that is it becomes an opportunity, because if you wanted to sit in 5 different movie theater seats and put your popcorn in one, it's probably a good opportunity because the theater was never on fire. Everyone just ran out. There's nothing wrong with Bitcoin. There's nothing wrong with the technology. Bitcoin at 6,000 or Bitcoin at 30,000 still provides the same exact future. I'm going to buy that Lamborghini at 60,000 rather than 200,000. But the price is based on the market. How many buyers versus how many sellers? And the sentiment is key. I'm not going to get too deep in the weeds, but the way Wall Street works is they perpetuate a certain sentiment because it allows them to purchase things very cheaply. If you remember last year, Bitcoin was on every newspaper, every this, every that, and the only people that didn't own it were people that had their money professionally managed. Do you know what it's like to be a multi-millionaire and see something going up every day and being teased by your landscaper that he just made $1 million last week, and then you call your banker and say, how come I don't own any Bitcoin? And he goes, oh, sorry, I couldn't buy any. That's how you lose clients. That's how people lose lots of money. That's how big money gets the F out of the place they're at. So Wall Street, they don't really like that. They don't play to lose. So if you had to ask me, my skepticism, my cynicism, is that this is going to be a coiled spring, that it's being artificially suppressed down. The sentiment is awful. You don't hear anything about it anymore, but nothing changed with the technology. So how's the price determined? Go out there and ask your cab driver. Say, do you like Bitcoin? If he says yes, the price is likely a lot higher. If he says no, it's probably likely a lot lower. It's really that simple because it's a retail market. Until they start becoming ticker symbols, and it starts getting into pension funds and mutual funds, and then it's going to become something much larger. When professional money managers have to allocate funds to this asset, that's when things get very interesting. So I'll tell you this. If I knew a circus was coming to town, I might buy a couple of tents. And you know what? I might look really silly. Everyone's going to say, why do you have those tents? Nothing's going on. That circus is never coming here. Well, guess what? If I'm correct and a circus does come, well, those tents that I bought for like 10 cents from someone are going to be worth a lot of money. And you know why? Because now there's demand. So what's the price determined by? Do the math. And we'll get into the math. I promise you. So it's a little more involved, but we'll get into it. All right, guys, we'll see you on the next slide.